Hi guys, it's Alex here. So today we're gonna talk about Tesla stock split and inflation.
Our Phil LeBeau has details for us. Phil.
Hey, Scott, Tesla filing with the SEC that it plans to do a 3-for-1 stock split. Now, this is not a surprise. The company indicated earlier this year that there would be a stock split coming at some point this year, and most expected that we would probably see it relatively close to the summertime. So what we have is Tesla doing a 3-for-1 stock split, and this is something they have forecasted for some time that they planned on doing. So again, Tesla 3-for-1 split. We'll get more details in a little bit here in terms of when the split is effective. Scott?
Man, we've been wondering, since the Amazon split went into effect earlier this week, who was going to be next. What do you make of the timing, Phil? I know you alluded to the fact that, I think you said something to the effect of we thought it would come in the early summer time. Why now? What does it mean that they're doing it now?
No insight into why they're doing it right now, if there is a strategic reason to do it now as opposed to waiting another month or two. So there's no way of saying exactly why they're doing it right now. But it was widely anticipated. In fact, if you talk with analysts, more than a few said to me, look, I wouldn't be surprised if we see this happen, sometime before July or August.
Yeah, and the stocks obviously come down a long way. As well, Phil, right? We're talking north of $1,000, so it's.
Oh, absolutely.
Look, you got the whole Twitter overhang, and there's been a lot of hangover on the stock regarding that whole drama, I suppose you'd call it. So the stock's already come down a lot.
It has, and the curious thing will be how much will this lessen volatility with Tesla shares? Remember, after the last split, everybody said, "Oh, you're going to see a lot less volatility." Well, I think we can go back and say we may have seen a little bit less than what we might have expected, but it was still there dramatically over the last year and a half. I can't remember the exact timing of the last split. So I will be curious to see what impact this has once it actually goes into effect. There's no doubt that the sell-off is due to the fact that people are saying, look, tech stocks, higher interest rates are going to have an impact. But keep this in mind, Scott. This is a company that right now it is dominating the EV market here in the United States. It'll ramp up in China. A lot of people look at this company and say they are primed to really grow if we do not see a major recession because the rotation into EVs, it is accelerating.
What is a stock split, you ask? A stock split happens when a company increases the number of its shares to boost the stock's liquidity. Although the number of shares outstanding increases by a specific multiple, the total dollar value of all shares outstanding remains the same because a split does not fundamentally change the company's value. So, key takeaways. A stock split is when a company increases the number of its outstanding shares to boost the stock's liquidity. Although the number of the shares outstanding increases, there is no change to the company's total market capitalization as the price of each share will split as well. The common split ratios are 2-for-1, 3-for-1, which means every single share before the split will turn into multiple shares after the split. A company elects to perform a stock split to intentionally lower the price of a single share, making the company's stock more affordable without losing value. Tesla stock now at $696. Basically, if you have a share of Tesla now for $696, after the stock split, you will have 3 shares of $232. Gary Black says on Twitter, critics say stock splits add no value, but empirical research shows otherwise. Bank of America found that companies who split their stocks outperform those that don't by 16 points in the year following the split. CEOs splitting their stocks are likely more optimistic than those that don't. Stock splits add value. Companies have outperformed the S&P 500 by 16.3% after split announcements. As you know, past performance is not indicative of future performance, so take this information with a little grain of salt. And I don't think this comes as a surprise to anyone. Inflation inflation hits 40-year high as CPI, Consumer Price Index, rises 8.6% in May. Usually when inflation is rising, stock markets get hit. Rising inflation can be costly for consumers, stocks, and the economy. Value stocks perform better in high inflation periods, and growth stocks perform better when inflation is low. Stocks tend to be more volatile when inflation is elevated. What do you think? Do you think we reached the peak of inflation and things will go back to normal from now on? Leave a comment below. If you liked this video, please smash that like button and subscribe. To show you my appreciation, I'm gonna show you this cute little puppy. Oh, enjoy and see you next time.